Welcome back to Africa This Week. Software development is an area of vast potential that has helped economies such as India thrive. In Nigeria, the Ministry of Information and Communication Technology is supporting growth in the sector through various initiatives in a bid to further stimulate what it has dubbed the ICT Explosion.
I've come to discover that we do have a software industry. It is fledgling, it is fragmented. But there are quite a number of companies and entrepreneurs, young people out there that are developing software for the use of the local industry. And in point of fact, some of them have actually developed software for the international market, but it's very fragmented and not that well coordinated.
What have you been doing to curb the fragmentation in the software industry and bring all the components together?
First of all, trying to create standards in terms of software development so that we have software that is useful in terms of quality and documentation and all of that, not only for the local market but also for the international market. The second thing that we're doing is we're trying to get, we're developing or establishing what we call incubation centers, because what we realize is that there are a lot of software entrepreneurs that are out there, but there's a difference between developing or creating new software and being able to commercialize it and take it to the market. So I think that we're doing some things in those areas, establishing incubation centers that will not only help to foster innovation, but will also help to take that innovation, working with the incubates, so to speak, to commercialize their applications, whether through business services, marketing services, legal services, and of course business mentees that will help them take these things through from innovation all the way to development.
What are some of the challenges facing Nigeria's software industry at the moment, and how are you dealing with those?
I think the biggest challenge is that trying to get local companies, not so much local, companies in Nigeria to buy Nigerian software. The major reason for that is that even though we're developing innovative, creative software, in terms of the quality, in terms of documentation, in terms of thoroughness of the testing of the software, we're still not there yet. So that's one big challenge that the industry needs to surmount. I think the other challenge, or there's several, but the other big challenge is funding. Software development does not survive through the traditional lending, collateral-based lending. Most of these young people don't have the collateral by which they to borrow money, and so we need venture capital funds to support them. It's a risk that you're taking, but clearly, if the risk pays off, the returns are really quite significant. So we're trying to create an innovation fund that is venture capital based to support the industry that cannot really survive on collateral-based and traditional lending. The third thing we need to, the third challenge or the hurdle we need to cross is around intellectual property rights. We have spoken to young software developers. Their biggest fear is that when they do develop this software, anybody can take it from them and basically just call it their own and begin to market and sell it. So we need to have very strong intellectual property laws, particularly for software developers, to protect them. So when they develop that software, they can actually claim the credit and for the commercialization and the returns that come from that successful commercialization.
Presently, there's a software training program taking place in Nigeria for 500 youths to develop their skills in software programming and so on. What next for them after this?
I think that's a great question. What next? The big what next is that we are going to start a process by which we actually bring the industry together, oil and gas, banking, manufacturing, and we will challenge them and say, look, you're spending hundreds of millions of dollars buying software from outside Nigeria. Give us your requirements. What is it that you actually want? I mean, yes, we may not be able to build the big enterprise resource planning applications overnight, but there are elements of integration packages, elements of ancillary or collateral software that is actually required, that is specific or unique to Nigeria. So working with the industry and the buyers of this software and asking them to challenge the local industry to build this software, we can actually get people, if you tell us what your requirements are, we can get people to build this software, test it properly, document it properly, and sell it to you. And that, for me, that's really the beginning. We can't develop the software industry if the buyers of the software are not satisfied with what they're getting today, or if you don't understand what their requirements are. So that's one big thing that we're doing. That will be the big what next in terms of creating jobs and begin to create an industry that can be successful.
In terms of job creation, as you mentioned, how much of an impact will it have on the employment figures? I
think it will be tremendous. I think if we, and really when you look at it, that the biggest challenge for us in terms of job creation is really for the young people. It's 18 to 30, if I can call it that. That's probably when unemployment is the highest, and of course, that's where we need to create jobs, because these are people at the peak of their career and their and enterprise. So in terms of what impact it can create, I would say there's a tremendous amount of impact it can create. And really I can just model it or just use countries like India to exemplify that. The Indian software industry is several $billion in terms of revenue. It employs, I think, about over 1 million people, and the collateral employment is over 3 times more than that. And I see Nigeria having a very large local market. I see Nigeria having a market that is hungry for technology, as we've seen with the telecoms industry. And so I am quite confident that we can create, several hundreds of thousands of jobs in the software industry alone over the next, I would say, 3 to 5 years.
Independent reports indicate that current infrastructure projects underway in Africa amount to $22 billion. One of Africa's fastest growing economies and most in need of infrastructure development is Nigeria. Mansour Ahmed, Director General of Infrastructure Concession Regulatory Commission, discussed Nigeria's infrastructure program.
Indeed, the current growth rate of 7% has been achieved despite a very weak infrastructure base. And the Vision 2020 for Nigeria expects that if we address the infrastructure deficit, we should be growing at a double-digit figure. So clearly, infrastructure is a major component of the economic growth trajectory for Nigeria over the next decade or so.
So tell us what has changed now that, say, for instance, an investor is listening to this conversation would say it is now time to look at Nigeria's infrastructure sector and there could be potentially here a window of opportunity for investment.
Yes, indeed, this is absolutely true. I think 3 things are happening. First of all, there is a coherent plan, over the next 10 years or so, 8 to 10 years, which focuses on a systematic development of the infrastructure base. Secondly, clearly the current growth rate, as we have said earlier, does indicate the capacity of the Nigerian economy to provide tremendous opportunities for infrastructure investors. Thirdly, and this is, I think, is perhaps the key, is that the government is now putting in place a credible and consistent framework that is intended to promote private investments in infrastructure, particularly through public-private partnership arrangements. The Infrastructure Concession Regulatory Commission, which I have the pleasure to head, is indeed the bulwark for that policy.
Now, of course, one of the big problems around infrastructure development in Nigeria and indeed in many African countries is the issue of consistency of policy. Now, you speak of putting together a credible plan that investors can believe in. But what guarantees can there be that things will be different this time around, because we know what has happened in the past?
Yes. Well, indeed. First of all, I think the plan, it's not only the plan, but also the fact that the plan is backed by a regulatory environment which is based on an enactment of a law which is intended not only to promote but to protect private investors in infrastructure.
Right.
As I said, the ICRC Act was enacted in 2005, although the commission itself was not established until 2008. But the purpose of that act and the purpose of the commission is to ensure that the environment is created and the framework, institutional framework is in place to ensure that foreign as well as domestic private investors that are interested particularly in investing in infrastructure have the necessary protection and the necessary environment to build confidence.
So let's look back over the time that the policy has been implemented. Have we begun seeing the results and fruit of that new policy? What kind of monies have we been seeing and where has that money been going?
Yes, indeed. And I think, as was recently stated by the Minister of Trade and Investment, over the past few months, we have seen significant interest being shown by investors from across the world. Okay. I think the Minister talked about over 4.9 trillion naira of investments proposed by various private investors, both in the domestic environment as well as internationally. But we have also received clear indications from multilateral as well as other bilateral investment agencies across the world, which shows tremendous interest in Nigeria, especially in key infrastructure sectors such as electricity, transportation, and indeed urban development.
To meet their 2030 vision, Kenya may have to evaluate the role of debt in its development financing and overall debt management. Kia Makara, Programs Coordinator at the Kenya Debt Relief Network, explained debt management in Kenya.
We have commissioned 2 studies, one on foreign debt, which we commenced on in 2011 and concluded, and another has been on domestic debt. These 2 studies are related in the sense that we were trying to look at the overall debt scenario in the country. And the 2 studies point out to 2 interesting things. One is over a decade or so, the share of the foreign debt within the total public debt stock has been declining, whereas the share of domestic debt within the same public debt stock has been increasing, and increasing actually at quite a higher rate. So those are the 2 key findings that these 2 studies have pointed our way.
Yeah, but why did you embark on the 2 studies in the first place? Because overall, you'd expect that the government would have a debt management strategy, and Kenya has never been amongst those countries cited as having an unsustainable debt burden, particularly if you consider that those countries that were in such a situation underwent very successful debt rehabilitation programs with the help of the World Bank, with the help of the IMF in the HIPC processes.
Well, our consideration and our main point of departure in commencing on these 2 studies was informed by an aggregate of a couple of issues. One is that Kenya just put across its Vision 2030, which is a national government's blueprint for development for the country. And then, in the past couple of years, ending with the promulgation of the new constitution, Kenya is starting to realize a new governance framework, which is both for the politics and for the economy and many other social pillars. From that, and from the international context of that, Kenya, within its debt management process, is deemed to be sustainable as per the World Bank IMF debt sustainability analysis.
Yeah.
We tried to draw a correlation to the rising debt levels and what that meant for investment in especially social infrastructure pillars, and within a long term, would this actually hold within the key principles of moving Kenya into a middle income country by 2030?
Yeah, but Kiara, the government could counter-argue and say they are elected by the people. They have a process that's accountable and to the citizens of Kenya in terms of how they come up with their budget and the overall management of that budget. You're suggesting in part that there is no transparency in the way the government is going about managing the debt strategy. Surely the government could counter-argue successfully that in fact their processes are transparent.
Well, actually, on the converse, what we are suggesting from the Kenya Debt Relief Network is that the government has this very robust policy about how it wants to take the national development forward. But there are some specific issues that of essence must be addressed. The one, as per the macroeconomic frameworks and measures of, say, the World Bank or the IMF, the Kenyan debt is deemed to be sustainable.
Right.
But when it comes to the question of how much resource we are putting across for social development infrastructure, this might beat the purpose of the kind of vision the government has. And out of this, what we found is that the government does have a reformed debt management department, and the way that it's been doing business around debt management is quite reformist in a big sense.
Yeah.
But there comes in another critical question. The new constitution, the new Kenyan constitution, anchors constitutionally the whole realm and framework of citizenly participation across the public finance management. And so certainly the whole issue of debt becomes one critical issue that needs to be unpacked so that it can be addressed in terms of setting a feasible ground in the going forward.
The second annual Africa Business Leader Award went live from the 1st of February 2012. After the inaugural event last year, the program is casting its net wider than just South Africa and will include West, East and Southern African business leaders. CNBC Africa spoke to the founders and organizers of this year's ceremony, who announced their plans for Africa's only Business Leadership Award.
The inaugural All Africa Business Leaders Awards made a splash in Johannesburg last year. The award honors business leaders in a number of categories and is the only award of its kind on the continent. ABLA founder Rakesh Wahi believes the award is another way of ensuring positive sentiment is generated on the continent.
Everywhere you go around the world, and I've got 21 offices around the world, we find that people talk about doom and gloom in Africa. And I think we need to now start talking about successes and projecting African leadership in the right light. And that is basically the genesis of this whole ABLA Awards.
This year's ABLA Award will have a more continental feel. And parent company ABN 360 hopes the award will consolidate its presence on the continent.
Our plan or our aim is to be in 20 countries by 2014. And I think taking ABLAs regionally has just been a natural evolution to this. We will obviously see the success of this at the end of 2012, but we do believe that it's going to be extremely successful, with the regional awards culminating in a grand finale in Johannesburg in October.
I think the question of integrity, the question of vision, and the question of leadership, if you look at that in package, it actually encompasses what we look for. It's that leadership, that integrity will then culminate in that person being a role model. That's fundamental.
ABLA entries will go live from tomorrow, the 1st of February, until May 2012. Organizers are hoping the event develops into a sought-after accolade that the continent's business people will aspire towards, as well as inspire those coming through the ranks.
Business leaders and true leaders don't look for recognition. They work, they're selfless. I think it's our duty as media companies to recognize business leaders and tell them the difference that they're making. So that's the way that we are approaching this whole concept of ABLAs.
I think it's going to be an award that is going to be so prestigious that a business person is going to be proud to have it on their business card and say that, I have won the African Business Leader Awards in 2012. And I think it's just going to be an exciting adventure for us.